All right, guys, it's Paul Singh, Market Speculator, with the trade report for Tuesday, February 19th, 2019. Let's take a look at SPY. I hope everyone had a great holiday weekend. Starting the week here on a positive note, let's review last week a little bit when we were down here. Heading into the week, we said best case scenario would be a break of the 200-day moving average and follow through. That was best case scenario. And it seems like just about every week during this run, we've been getting our best case scenario. We've been bullish. We expected this market to continue with the market internals that we were seeing, which was a big change from here when we expected every bounce to fail. We've been expecting every bounce here to continue, and that's what we're getting. Some of the market internals, we know we talk about T2108. This is stocks above their 40-day moving averages. We expect it to be very strong, and it has been. And we're getting all-time kind of readings here when you consider where the market is. Essentially, the market is way down here, and we're way up here on T2108, which is the opposite of October when the market was way up here, but T2108 was way down here, and we expected a down move. We were prepared for it, and we profited really nicely from it, and now we've profited from the up move. So everything is working really good. Remember, don't just focus on the market itself. Look at these internals. The other thing I like to look at is RSP. As you guys know, SPY is not equally weighted, even though it has 500 stocks. They're all weighted differently. You know, the Apples and some of the other stocks, they're weighted much more heavily. But when we look at RSP, we get a broader based, we get to see if it's a broader based rally because now it's equally weighting everything. And you can see it's even stronger here. We're farther away from the 200-day moving average than the market is. So that's another good thing. And I've got, about 10 other things I watch, and just about everything is looking strong. So we continue to be bullish. I've been slightly bullish, and we might even be getting to where we can think about getting aggressively bullish now. It's always a little tough to do that when the market is extended, but we've had a good earnings season. All these internals are looking good. And now our key here, two keys to the downside, we just want to make sure we stay above the 200-day moving average. Consolidation is okay. We talked about the here when a lot of people were getting scared when the market was starting to test here. We knew that was expected because we're so extended. We expect some back and forth. Again, if the market pulls back here to 274, that's fine. But a key to the upside now is 280. We've tried 1, 2, 3 times to break that level. And you can see it's a key level because it's where an old high was. So this would be the 4th time now since the bear market started. And I think this time, if we test it, we are going to break. So no guarantees, but that's what my bias is right now, just because of, again, the market internals and the price action, earnings season, everything looking pretty good. So we'll look for a break here of 280. If we can't break that, we might get range bound for a while. So I would say right now, best case scenario is test of 280 and break of 280. Worst case scenario this week would be a breakdown below these two key moving averages. So we'll say 274, basically a breakdown below 274 is not what we want to see. Anything else is fine for the market. Let's look at the Qs. We like the way the Qs are acting as well. And then, of course, we love the way IWM is acting. We want small caps to be good, and we're actually seeing a move right now towards small caps. And some of the bigger caps are actually lagging a little bit. But IWM is coming into a key territory here where it hasn't crossed its 200-day yet. Now, that does not mean it's showing weak relative strength. It's just because it was beaten down so much here when it was showing a lot of weak relative strength. But actually, on a percentage basis, it's handled the market even better than SPY has since the bottom. But we are going to watch for a break of this level here. Semiconductors we're watching closely have been very strong. Biotech has been interesting as well. And then Brazil back on track after pulling back hard. I think we could enter here if we wanted to. And then we've been talking about home builders, and we've got some home builder stocks on the focus list looking very strong. Current positions, earnings breakout play race. Right about at our entry level, we needed to break this open gap here at about 270 to 127. A break of that would set us up. FAS, our financials play a little above our entry level, but we need to see that push there over the moving average. And then our recent entry ERX, about a point above our entry level. And energy and oil really strong. And I might even consider getting back in oil again, as it's showing strength. A bunch of focus list stocks here. Let's start with the home builders. BZH is my favorite because it's a lower float. I think you could enter it today if you wanted to. If I take a position, BZH might be the one. KBH also really strong, but I'd like to see it break the moving average. And some of the bigger ones here, Toll Brothers looking pretty good. Lennar looking good up over its moving average. DHI also, all of these are good choices, but again, BZH is my favorite just because it's more volatile, lower float, has more potential to the upside. Then we've got software stock, IGV. First, let's look at the ETF. Software has been leading the market, testing highs. Many of the stocks are above the highs, and two that are on our list this week. Twilio up over the 9 here, and then we've got Cyber as well, post earnings breakout play. We'll watch for a setup. FSLR solar stocks are strong. FSLR testing its moving average. Another one I like is CSIQ. Very strong here. Watch for a break of 22. China stocks, Huya is the IPO play after its IPO high here. So we have room to move up to 50, and we're at 20 now. Looks like it's bottoming. I like the volume pattern in here. So it's consolidated for a while with good underlying strength, and I think now could be the push to 30. Baba also had been hit very hard, put in the bottoming formation, and is now testing its key moving average here. I like this one today. There's a lot of stocks I like today. Win, we've been talking about this one as a bottoming play, looking good as well. Similar pattern. Post earnings breakout plays, SGMS, really strong here. This is one's related to gaming. They provide the software for some of that, and we know a lot of states are allowing gaming now with the Supreme Court ruling a while back. FLWS, another post breakout play in retail, looking very strong here, holding up at the 9. And then Tupperware, this was a breakdown, but I would watch for a gap fill here at about 31. If it can break 31, I think that could set it up to a move about here to 36. And then we've got the metals X looking really strong. FCX breaking out big today, too extended to enter. CLF also one that I like, and we'll see if it holds the 9. A few of the bigger stocks here. Netflix looking very strong here as it tries to break out of this range and could test 400. And then finally, NVIDIA, I like a lot too. It has filled the gap here after breaking down, could set up a move to about 200. So a lot of good choices today. If the market holds today, I think I'm going to add a position today. And then throughout the week, as the market continues to hold, we might add a few more. We're in 3 now. I'd be willing to go up to about 6 positions right now. So we'll see how the market holds up, and I'll slowly add and build that portfolio here as we get more and more bullish.